What's up, guys? Today's episode of Full Signal is with Eric Jackson. He is specializing in 100-bagger stock picks. We went through all his highest conviction stocks, including Opendoor, Iron, and others, and this is a fantastic conversation full of alpha. You do not want to miss this. I hope you enjoy this episode. Eric, we have a ton to cover today. I really want to start with your thoughts on the AI trade, what you think is happening right now, and where you think we're going in the year ahead.
I'm extremely bullish on AI and on crypto. I think a lot of people see those two things as completely separate. And I see them as going hand in hand. I think there's, over these next 15 years, there's going to be an explosion of AI, not surprisingly. And I think what people are missing about AI is that basically AI is going to do 90% of the tasks that we do today in the future, I'm talking 5 years out, 10 years out, 15 years out. And that threatens a lot of people. Obviously, some of the big questions are like, am I going to be out of a job because of AI? But I think what people misunderstand is that AI accomplishing 90% of our daily boring tasks will free us up to do a lot more interesting things for ourselves. So I don't think there's a cataclysmic rise in unemployment that's coming. I think that there's just going to be this velocity of change brought about by AI in terms of all the kind of boring things. For example, this morning, my wife was trying to figure out where she could go to do a hot mat yoga Pilates class, within a 3-mile radius of where we're staying. And she had no idea. I had no idea. She spent some time trying to figure it out on Google, got some kind of bad answers. We went on to ChatGPT. Within, I'd say 30 seconds, we found this place, 3 blocks away. She ended up going, best experience of her life. But we had to do that. We had to take the time. That whole process, 30, 45 minutes could be saved for both of us in the future, will be saved by AI. And the crypto angle to that is that if we're going to be obviously booking classes, getting jobs done, my wife was wanted to reserve her spot and she had to pay some money to do so. That AI is built for a world where the whole transaction end to end and the settlement has to be perfect and complete. And crypto is built for that. It's built for an AI world. ETH is the whole programmable settlement layer that transactions get done in. And so I am just extremely bullish that, both AI and crypto are going to explode. They're going to grow hand in hand. They are necessary to kind of fulfill each other's kind of ultimate vision. And it's going to end up being a positive for our world, not a negative, threatening, we'll all be living in rocks in the future the way that some people make it out to be.
World of abundance.
Yeah.
Caused by AI.
Right.
What do you make of all these companies coming out and blaming AI for layoffs this year?
Well, there will be for sure jobs that are replaced. If you work in law, if you work in accounting, if you work in an area like compliance, if you work in a call center, if you are doing a tasks of drudgery, I would say get ready, because you need to kind of start using your brain again and start to be a little bit more creative and thoughtful, and just doing things that a robot could do is probably not long for this world and will be replaced. So anytime there's change, that's threatening. But I think where a lot of those people who are doing those kinds of tasks are going to end up is in a place where they are a little bit more creatively excited every day when they go into work. They're doing things that they did. Who would have thought 5-10 years ago, Phil, did you think that you would be hosting a podcast like this? Building your brand. Did you even know what that was 5 or 10 years ago? The world changes and we adapt to it and we kind of, figure out how we can find our way in it. And I think the same thing is going to happen. It's just, we have to understand how, what do we need to do to compete in this new world? And I think we're starting to figure it out already. Most of us kind of innately today know that we can't always rely on the first answer that we get back from ChatGPT. And we know that we've got to modify our prompts and ask it this way or that way, or go back to it and say, hey, no, I realize you only got 65% of that question right. What about this? What about that? What about this pushback? So like, that's just like the way the whole world, it's the way that people today know how to use social media, whereas they did in 2006 or 7 and so forth. So it's a constantly, learning process. And, the youngest people are probably the most adept at figuring things out and adapting to kind of that new world. And the same thing is going to happen with AI. It's the old dinosaurs that say, oh, this is just like Global Crossing from, the .com era. And like, those are the people that are going to have the toughest time adapting to this new world.
I totally agree with you. And I'm very optimistic about AI and technology in general. I'm very much in the camp that things will be better, not worse in the next few years. But what I need help understanding, your Bitcoin thesis for 2041 is $50 million.
Right.
How did you get there? And is there an attachment, it seems, to the AI thesis?
Well, it's kind of an outgrowth of like figuring out like what's a 100-bagger. Like, for example, like Carvana, I got into early a couple of years ago when it had gone from $400 to $3.50 at the lows. And now it's come all the way back basically to $400 from there. And at the time of the lows in December 2022, if you asked anybody about Carvana, if they, in finance world, finance Twitter, I mean, they all were kind of universally negative at that moment in time. And you would hear things like, it's run by a bunch of criminals. This is what a bunch of idiots. Like, you'd have to be an idiot to let your company go from $400 a share to $450 or $350 rather. And so it's human nature almost that when you're in the moment of like max pain or pessimism, you can only see like what's right in front of you. And it's very difficult to kind of take that kind of far out, kind of long-term, more optimistic view of like how a stock could come back from the dead, how it could rise to $400 again. But you could see in the case of Carvana, it wasn't a broken platform. It wasn't a broken service. And in fact, if you actually talk to people that used the service, not invested in the stock, but just used the service at that moment in time, they would tell you they loved it. It was so easy. It was the best customer experience they had. And so they obviously had too much debt. They had high interest rates. They had these things going against them. But if you could imagine that if they started to focus on profitability, which is not something that they had done before, they had the great customer service going for them. They could probably renegotiate their debt if they started to get their stock price higher and so forth. And slowly and surely, like they would take these steps. You could envision like how they were going to be like a much more profitable business like going forward than they had been in the past. Anyway, I'm saying this, as a lead up to Bitcoin, in that I think we get so tied to turning on the TV and just seeing like, what's the price of Bitcoin today, like going by on the ticker. And some people are bearish and they say, oh, it's a Ponzi scheme. And some people are bullish and they just, throw out these like kind of pie in the sky targets that you can't really tie to reality. And so it's kind of hard to latch on to like, what is the value of this thing? So for me, when I started to try to use the same, system that I use to kind of analyze Carvana, I'd say to myself about Bitcoin, okay, like how is this thing that, obviously the thing that you hear most about is, it's digital gold. This is going to be like the new version of gold. And you can say like, well, how big is gold today? How many central banks around the world own it? How many sovereigns own it? Why do they own it? So could Bitcoin be as big as gold one day? Seems kind of, that seems like a safe assumption and so forth. It's obviously like digital. It's programmable, versus like a hunk of rock. Like, yeah, I can imagine how like as time goes on, younger generations say, hey, this is much more preferable to using gold as this sort of store of value. But is there going to be a way that you use it in monetary terms? Like, obviously, nobody since the guy who bought pizza with Bitcoin back in like 2011 or whatever it was, like has been using it for daily transactions. So when I started to think about it and how the world is moving, what what the penny dropped for me when I realized that, what undergirds a lot of the value in our system is sort of like something I call the global collateral layer, which is like, what do we rely on to borrow against when we're a rich kind of sovereign nation or when we're a central bank? For a long time, like it was gold, like back in the day. And then in the 60s, there emerged something called the euro dollar. And that sort of like underscored a lot of the economic system. And then on top of that, there's obviously like U.S. treasuries and like the U.S. dollar that we use for our day to day. But something has to kind of underlie that. And I think Bitcoin, we are on a track to, in 15 years from now, and I have this thing I call Vision 2041. By 2041, I believe, like, it seems obvious to me that like Bitcoin is going to replace like the euro dollar of that we saw in the 60s to 2000s, and then after that there was this shadow banking system you used to hear about, talked about. Today there's like sovereign debt. So all the countries around the world issue debt, and then they kind of borrow against that, and they do their daily like government transactions. But like there are problems with that, and in some ways, like Bitcoin is much superior to kind of any of those in the sense that it's digital. It's it has like this kind of apolitical nature, so it sits outside of central banks. It sits outside the influence of whoever the latest Treasury Secretary here is in the U.S. And it's not so euro dollar wasn't a threat to the U.S. dollar. Eurodollar wasn't a threat to U.S. treasuries. People still use that, but there's some like underlying thing that a lot of other countries and the financial systems borrows against to kind of do things. And so today, like the UAE, they issue debt, or some random country issues debt, but they could rely on Bitcoin, and I think they're going to see like over time, like that's much more logical. So that sovereign debt world is an enormous financial world. And it sort of subsumes the gold. And so it doesn't mean that we still won't go to the dry cleaners and pay with, our debit card or something like that and pay in US dollars. But it means that more and more we're going to borrow, like the thing that we have of value in our own portfolios is Bitcoin and Ethereum as well. And we're going to borrow against the value of our Bitcoin that we are buying today and we continue to buy tomorrow and next year and so forth. And we'll do transactions, but Bitcoin will grow in value over time. It's not going to shrink in value, in my opinion, especially as it becomes like this sort of foundational piece underlying the global economy. And there's something else that goes on a lot, especially with tech companies, called the power law, which is basically like when there's sort of one dominant player that emerges as the winner in some space, whether it's Google in search or NVIDIA in GPU chips or something like that. Like there is a coalescence behind that player, and it usually a spike in the value of that stock or company, or just like a spike in market share when the actors in that space realize, oh, this is the top dog in this space. And that happened with gold. There used to be like other metals, at one time in our society that people thought were of value, like silver or whatever, copper. But suddenly people realize, hey, I think gold is going to be the dominant kind of store of value of our time, and suddenly its price dramatically increased. I think the same thing over the next 15 years is going to happen at some point with Bitcoin, and people seeing this. Hey, this isn't just digital gold. This isn't just some sort of Beanie Babies, like fad that we've had for 16 years or however long it's been now. But it's actually going to be kind of the dominant way that we borrow against to do things, countries, sovereign states and so forth. It's the collateral that we're going to use to kind of get things done in our modern economy. And so if that's the case, you can, and you look at the size of what that sovereign debt market is today. That's how I got to this sort of $50 million target by 2041. So by that time, like, all the economies, including the US, will kind of tacitly support it. It won't mean, it's not that the Treasury Secretary is going to say, hey, we want the US dollar or US Treasuries to take a back seat to Bitcoin. No, they will still be the dominant kind of currency and the way we do things in the world. But it's going to be an acceptance that, hey, Bitcoin is sort of the way that other countries and the whole economy is functioning today. We're borrowing against that to kind of get things done. And when people see that, there's going to be an enormous spike up in the value of Bitcoin.
Some of you may not have heard this, but our partners at Public just launched something called Generated Assets. It brings AI into investing in a way I've honestly not seen before. Here's how it works. You type in an idea like AI-powered supply chain companies with positive free cash flow, or something like defense tech companies growing revenue over 25% year over year. Public's AI then dispatches a swarm of agents that can scan every single stock, evaluate them, and instantly build a custom index around your thesis. What really stands out is how clearly it explains why each stock is included. And before you invest, you can even backtest your idea against the S&P 500, so you're making decisions with real context and not just guessing. Beyond generated assets, Public lets you invest in stocks, bonds, options, crypto, all in one place. They'll even give you an uncapped 1% match when you transfer your investments over from another platform. If you want to build a portfolio that actually reflects your thesis, visit public.com/openingbell. That's public.com/openingbell. Now let's get back to the conversation. So I think this is an amazing thesis. I have not heard this angle, to be clear. I talked to a lot of investors who say they feel like they missed Bitcoin because it hit $100,000. Doesn't sound like you're in that camp at all. Sounds like you think it could still be a more than 100 bagger, even from $100,000, which I think is interesting. Because many investors I'm speaking with, they've either moved on because they think they missed it, or they've been in it for a long time. There's very little in between.
Right. Well, I mean, listen, I remember like Thanksgiving 2017, like when was like probably the first Thanksgiving that we all sat around and talked about Bitcoin. And then like pretty shortly thereafter, like it sort of dropped in value and people were like, it's a good thing I didn't buy Bitcoin, like when my family was telling me. And then we sort of had like another run, and obviously in 2020 and 2021, and kind of another hurrah. And then we had like the crash of 2022. And then people say, well, I'm glad I didn't do it. I mean, I think, Phil, like, one thing I noticed with Opendoor, like I got into Opendoor this past summer in the 70 cents range. It hit a low in June of 51 cents a share. So it was just under $400 million market cap company then. Today it's around $7. So it's been about like a 10x for me from here. It got as high as like $11, I think, in September. I came out with my thesis saying like, I think this thing in 3 years is going to be worth $82 a share. And this was before like Kaz, the new CEO, kind of left Shopify to run Opendoor. Now I think they can go, far past $82 to, $200, $500 a share. I'm really bullish on Opendoor. But the amazing thing is, like, as we sit here today, it's a $7 stock, but even when it was a $2 stock, $1.50 stock, I got constantly on Twitter these questions. Oh, Eric, I missed it. When's your next 100 bagger coming out? Like, because I want to position myself for that. And so like, it's just a constant feeling that people have that, this, it had a little 10% spike or 20%. I missed it. Why would I want to now be one of the dumb retailers that like gets sucked in like right at the top just as it's about to crash? We're almost like hardwired to expect to have the rug pulled from under us, right? And we just cannot envision that a stock could just keep going and going. Like, if the stock is truly going to $82, like, and it's a $7 stock, you didn't miss it. If Bitcoin is going to $50 million a share, I mean, obviously, like at a whatever it is now, 90K or something. I mean, we're still really early, and it's hard to, Bitcoin's been around 16 years. It's hard to imagine, like, could it really have another, leg up and all this kind of stuff. So, I accept that's like the human DNA that we walk around with, and it affects our cognitive biases and all this kind of stuff. But I mean, that's why I find it helpful just to kind of try to step back, try to kind of use some analytical lens to look at it, try to, in the world of technology, Remembering the importance of the power law, and and the importance of platforms. Like what's a platform? Whether it's like an Opendoor that has this potential to become a totally new real estate platform and rethinking how we buy and sell houses. Just like Uber was like a completely new platform that sort of disrupted and disintermediated all these like local cab companies that we were used to just calling on the phone and ordering up a cab for, and making us see like, oh, this whole transaction can be totally different from end to end. Oh, and wow, could be, pleasurable and kind of much preferable to the older way and stuff. So, I mean, these things happen all the time. And if you try to, like, I think, pay some respect to those kinds of dynamics and try to imagine like new problems that come along, like, hey, how does Bitcoin fit into this model? Hey, how does Ethereum fit into that kind of a model? And oh yeah, well, logically speaking, then if this plays out and that plays out, then you could see a world where this could kind of get to this level. And so that's what I try to pay attention to. I mean, the good news is, I think, for all the retail traders who follow me and are fans and follow me on X, I really feel a bond to those folks, because I know like there's such a hunger out there. There's like a frustration with how difficult it is to get ahead, financially in life. And as if you're a 20-year-old, saving up to buy a house or whatever, if you get married, saving up for your kids, because you want to put them through private school or college or whatever it is. Like it's never been harder in some ways. Like, and governments, they can't manage their finances, and they just continue to like pick our pockets, raising fees for this and parking tickets and taxes and all this kind of stuff, because they can't manage their own books the way that we have to in our own families. Like, and so there's this hunger out there amongst like a lot of people to, hey, I missed Carvana, I'm not going to make my fortune from, betting DraftKings tonight on like some 6-leg sports parlay. So I think the stock market is the answer, but how do I do it? They're starting to do research and they're looking for these 10x, 50x, 100x opportunities. And what's really, what's amazing, like, is like, if you sat back in the history of time from this moment back till, the earth was created, like, we are all so lucky that we walk around with these computers in our pockets and we can dial up like some AI service like ChatGPT or whatever. And like, hey, if with our own brains, like, start asking questions and trying to figure out, like, is this company more valuable than that company? You don't have to have an MBA. You don't have to be a rocket scientist. You don't have to be an expert in biotech to start asking questions and basically pulling yourself up by the bootstraps and trying to figure some of these important questions out. So there is hope. You got to put in the work. You got to put in the hours and the discipline and get up early and all that kind of stuff. It's on you. Nobody's going to do it for you. Nobody's going to drop a bag of money in your lap. But what aren't you blessed that you get to use all these tools available to you basically for free to kind of help yourself out and help your family out and kind of create some generational wealth?
It is an amazing time to be, one, a person, but also an investor. And you are writing and speaking so much about finding these outsized asymmetrical opportunities. Can you walk us through how you find these 100-bagger stocks? Because I think a lot of people look to meme coins or private investments for 100-baggers, but you are looking in public markets, which I think is really interesting.
Yeah, and I mean, there are meme stocks, just like there are meme coins. There are shortcuts out there, like playing the Powerball is a shortcut, right? But I think most of us realize the odds aren't, in our favor with pursuing that, just like they're not with zero DTE options or something like that, which I don't endorse. So the good news is, though, I see a lot of people that say, hey, I have time. I have some job. Maybe I'm an electrician. I'm a pipe layer. I'm a podcast producer, or whatever the case may be. So that's generating salary every day, which is great. And I'm going to continue to do that for the rest of my life, hopefully, or do something else at some point as well. But I got to start saving. I got to start putting money into stocks. But I have time working for me, and so I think a lot of people are saying, okay, what's a stock that if things work out, it's not a guarantee, we realize it, but something could play out in the next 5 years. And so they are, if they do the work and they do the research, they're willing to kind of stick with it through the like ups and downs. And they realize that like there will be volatility, especially with tech stocks. I mean, people hate the volatility. I mean, and I don't like going through it myself, but you have to realize like it's a feature, not a bug, of any high volatility asset like Bitcoin or Ethereum or like some high growth tech stock. You cannot find something that's going to 10x or 100x without a lot of drawdowns. Even a stock like Apple. Apple's had something like before the iPhone. So from 1981 until 2007, they had 7 drawdowns, I believe, of greater than 40% or something like that. And they had, including 2 that were over 70% drawdowns, enormous. And then even after the iPhone, I think they've had something like 4 or 5 drawdowns of at least like 35 to 50%. So, and this is like the biggest company in the world, the biggest tech company, the biggest success story. And yet like there has been constant volatility is my point with this stock. So I think a lot of folks that are looking for kind of the next 100 baggers, they have to like gird themselves for there will be ups and downs, and you have to, but your strength, your advantage over Wall Street and all these like hedge fund hotshot guys who smirk and crack jokes on Twitter constantly anonymously because they're too afraid that if they really like showed who they were, they would get fired by their bosses. They can't play the same long game that retail can. And so you use that to your favor. If there are big drawdowns, like, we're recording this when Iron, this, former Bitcoin miner that's now transitioned to be kind of more of this like AI, data center provider. They had a big, a 15% drawdown yesterday because they announced a convertible, financing, which in my opinion, was all about sort of cleaning up some, I guess you could call them mistakes that they made in the past in terms of like more expensive financing that they pursued. Maybe they wouldn't say it was a mistake because it sort of helped them get from A to B and from B to C and all this kind of stuff to make, to allow them to be in this position, fortunate position that they're in today. But they did a new financing to kind of clean all that up. Wall Street didn't like it. They, sold the stock off. It was down like 15% in one day. People were saying, "Oh, this is the end." I think Jim Cramer was taking shots at it on TV this morning. But in my view, and I think if you're a retail trader or investor who believes in a name like that long term, and you think it could be a 100 bagger, I still think Iron can be a 100 bagger from here. Then you use these like momentary, day-to-day 15% pullbacks to add to your position from all the money that you're making from your job and stuff like that. So your job is to kind of be disciplined, not get too emotional, play that long game, do your own research. Like I can't find all the good 100 bagger ideas in the world. So I'm always encouraging people that, follow me, like, do your own research. I mean, don't rely on Eric Jackson or Dan Ives or Tom Lee to like, we're not your financial advisor, but hopefully we can, inspire you kind of to put in the work yourselves. You'll probably find better stocks than Carvana, better stocks than Opendoor, I'm sure. Like but when you do, and you truly believe in it, you got to get behind them, and you got to put a meaningful amount of your capital behind them. It's not enough just to have like 100 positions where each one is only like 1 or 2% of your assets. Like you don't want to bet the farm. I always get nervous when I hear people telling me on Twitter that they're full port open or full port iron or something like that. Because like, as they're all, I love all the stocks that I own. They're all my babies. I have a hard time like saying I love one more than the other, but like there's volatility, like it's just having all your eggs in one basket. And I think it's like sort of a better idea to kind of have a little bit of diversification, but not too much. So, probably 10 stocks is maybe the max that you need. And you want to make sure that if you really believe in Opendoor, like, do you have 10% or 20% of your assets behind a name like that? Because if you truly think it can 100x, like what are you 100xing? Like what's your starting point, and where's that going to end up at 100x later if all goes right? So you just want to make sure, like, it's not just $500. It's like something that could be like more meaningful to you. But so that's like how you do the trading. In terms of what you look for, though, like the similarities like between an Opendoor and a Carvana, one was trying to like basically come up with a new system for how you buy and sell your used car. One was trying to come up with a new system for buying and selling your home. They were basically trying to build a national platform. They were trying to build a brand. Uber is another example of kind of doing this in the whole ride sharing space. And then later in kind of food delivery. And then you're looking at, you don't be so nervous about if they're losing money today. I mean, all tech stocks lose money at the beginning, and their investors grant them that because they realize, like, at some point, if you truly develop a service that people love and they come back to, there's going to be a flip, and this sort of power law thing starts to happen. At some point, Uber became the dominant way of taking, a ride in New York City instead of hailing the yellow cab. And when that shift happens, that's usually like profitability spikes up, and there's a re-rating of a stock associated with it. So those are some things that you want to look for. You want to look for, like, when I looked at Opendoor, I think there's this guy Keith Rabois. He's now the chairman at Opendoor. And he was the guy who wrote the original business plan. I remember him saying early on, I think this was before he kind of rejoined the board, that the largest, like at one point in the early days of Opendoor, they were looking around and they were saying, like, what's the most successful like real estate company in the world in terms of market cap size? And I think at the time it was like it was probably Rocket Mortgage, and they were a $30 billion market cap company. And yet, like, global real estate was like a $3 trillion, market,
Wow.
And so, like, nobody had really mastered and nailed like the opportunity that existed there in terms of the total addressable market with a service that people just loved and was so much easier and cheaper, and kind of brought more kind of a surety to like the whole, what price am I going to get for my house? When am I going to get it? And all this kind of stuff. It's a global problem. So that was a market that seemed like ripe for, the disruption, and ripe for a player like an Opendoor, who, if it got its act together, could kind of be that kind of company. So it's never like a copycat like situation. Like Carvana wasn't totally like Carvana. Opendoor wasn't totally like Carvana. Carvana had a great management team. When their stock was in the dumps, their CEO bought $70 million of his own stock. This guy, Dan Gill, who was the chief product officer, who's just like a regular Joe guy, he dug into his own pockets at like $7.50 a share in November 2022 and bought $3.5 million worth of Carvana stock. So like that, whereas at Opendoor, like everybody who was working on the management team was selling stock constantly. And so, but we were able to kind of, force some change there. So it's never like a cookie cutter kind of situation, but that gives you a flavor of like the kinds of things that can work. And I guess another thing is like, whether it's Bitcoin, whether it's Ethereum, or like Opendoor has been around for over 10 years. Like if you've survived as a company or as a coin or a stock for like more than 10 years, like that says something about your durability. And it's something they call like I think the Lindy effect in crypto, where it's sort of like, something that's lasted 10 years is likely to last another 10 years kind of a thing. So there's that. And I mean, the other thing is that the importance of founders, like Carvana is still run by its founders. Now at Opendoor, the founders have returned. And there's something like powerful about that, the energy that a founder brings to a company and a management team, which is like a serious asset in a turnaround.
Real quick, we'll get right back to the interview. Just wanted to pop in and say, if you like this content, I write a newsletter every single morning called Opening Bell Daily. I cover macro, the stock market, asset prices, why things are going up, why they're going down. And if you want to get that for free, you can sign up at the link in the description. Let's get back to the interview. So how does Better fit into this overarching thesis you have for 100 Baggers? Because I know you've been talking about Better a lot. What's the thinking there?
Well, it turns out fishing amongst like these de-SPACed companies is actually been a kind of a useful way to look for 100 baggers, because Opendoor was a de-SPACed company. They came public in 2021. Better came public through a de-SPAC in 2023, a little bit later. But both of them, like at their lows, I think were like down 90+% from like their all-time highs of stocks. So to 100 bag, like it helps if you start low. If you like the cheaper you start, the better. Yeah. It's going to be hard for Nvidia to 100 bag from their current market cap. Law of large numbers, but Better was really cheap. They're a mortgage originator. They're run by a founder, so I like that. And I had the chance to kind of meet the CEO, Vishal Garg, a few months ago in the summer, and kind of I didn't know much about Better, other than I remembered that Vishal had been the guy who, at the end of 2021, had fired 1,000 people on a Zoom call, and like that seems to be like when I talk to most people, like that's all they knew about Better.
I remember this,
and so but basically, their job was to kind of find you or me like the cheapest mortgage possible if we came to the Better website, and looking for a mortgage. And obviously, at the beginning of 2021, when rates were zero, everybody was buying real estate and everyone was qualifying. And Vishal had this business where he actually couldn't keep up with, like, he was drinking from the fire hose and trying to keep up with the demand for mortgages. So he had to hire like over 1,000 people working out of India to basically like push paper around manually. Remember I was talking before about like being a robot in your job, like working in a call center or something like it. These people were robots over in India, cheaper because they were over in India. They're not in a call center here, but they were basically just like, oh, Phil's looking for a mortgage. Okay, well, we got to do this. We got to move this paper and that paper. Okay, here's a commitment letter for Phil for such and such mortgage with this credit union in whatever state or whatever. And then the rates rose suddenly at the end of the year, and basically Vishal saw his mortgage originations go from like a $50 billion a year level to $5 billion. So basically dropped by 90%. And their business model is they get a 2.75% take rate on every mortgage that they place. So the bigger the originations, the bigger the profits for Better. So it did make sense, like from just a capitalist perspective. Like if you or I running a business and suddenly the demand drops by 90%, you'd say you have to rationalize your costs. And so he got rid of the people. But what I think the market missed about Better, just like they've missed it, they missed something about Carvana, they missed it for Opendoor, was that Vishal is a really tech savvy guy. And he had started building an AI system at Better over 10 years ago. In fact, like his first significant engineering hire, believe it or not, was the guy who was working at Spotify and who built the original Spotify music matching algorithm that kind of figured out like what music you like to hear based on your past listens. And so Vishal went to this guy and said, hey, I've got an even more complex but potentially more lucrative problem. Could you match people to like the best mortgage based on everything that you know about them and their credit score and like their history? And if you can, and we do a better job of it, this could be like a much more powerful business. We can offer cheaper mortgages and so forth. So they started building it. It wasn't ready when the world was going gangbusters in Zerpland in 2020 and 2021. But after he let the 1,000 people in India go, like he basically doubled down, even at $5 billion a year in mortgage originations, trying to build a better AI system to kind of power them, hopefully through the next boom times, whenever that would come back. And obviously, like he's trying to survive, through these like lean years. So now we're starting to see obviously a little bit of relief in the mortgage rates. It still has more work to go to unlock the housing market in the U.S. But it seems like that's what's on the horizon, especially when Trump's new pick for Fed chair takes over. And so you could see better times ahead for Better, and now they're perfectly positioned. But if anyone's still covering them on Wall Street, and a lot of the sell side firms just sort of dropped research on them because that's what happens. The stocks that drop in price, like they figure, this company's like got cancer. Like why would I want to be associated with them? I'm just going to like drop coverage and focus on a bigger name that more people care about. So nobody's paying attention to kind of all this work that's gone on under the hood in these last few years. And they're thinking that, well, if things really, do well, they could go back to their $50 billion a year, in volumes. But no, that's not the case, actually, because now they've built a HELOC business, which they didn't have before. They've built they call it a mortgage in the box business, where just in addition to just like going to their website yourself, direct to consumer, and kind of asking for a mortgage, a lot of people go to mortgage brokers in their local towns. And but Better's approached a bunch of these mortgage brokers and said, hey, we want to be the technology that we give to you so that you can give your clients like the best mortgages. So they're a much bigger business. And the truth is, like, if they had the kind of AI system in 2021 that they have today, they could have actually done $250 billion worth of originations that year. So 5x, the so-called like best of times that they experienced. So, but people don't know that. They won't believe it until they see it, type of thing. And so I think, the thesis hasn't played out yet. I mean, I started buying the stock when it was like $13 in the summer. I think it's around like $45 today, $50. Which is great, but this is a stock that I think, like, if it does go back to boom times and they can do 250 billion in originations, as well as see a similar uptick in these new businesses, the HELOC business and this could be like a $12,000 stock, which seems like preposterous to kind of some, but that's just the math. If you actually run the numbers, now they'll probably do stock splits before then, but that's the kind of the delta. It could be like a 300 bagger, over these next like 3 years, if they really kind of fulfill their promise. And that doesn't even require it to go back to a ZERP world. It requires like mortgage rates to go back to like the 30-year average, which is probably 200 basis points lower than where it is currently. So,
wow. We have one more stock to cover before I let you go. And I wish we could talk more about Better, because I think that's also an amazing thesis, and there's such a macro component to it. Cipher Mining, CIFR. What is this stock, and why is this also a 100-bagger in your view?
Okay, so I mentioned iron before briefly as this stock that got hit just yesterday. Cipher is in the same business as iron. So basically, they started out life as Bitcoin miners, and they thought like, oh, there's money to be made from just like being really good at building out data centers and mining Bitcoin. Having a bullish view long term. I don't know if they had a $50 million by 2041 view, but like they thought the price of Bitcoin was going to go up, and they could make money by actually mining the Bitcoins. It turns out that you learn a lot through kind of building that kind of a business. And one of the benefits to both of them of kind of being early in that space is that when they recognized that AI was starting to take off, they realized that the kind of data centers that needed to be built out for AI were, in some ways very similar to kind of their skill set, their core competencies that they built up running a Bitcoin mining business. And so they could also see on the horizon, I mean, everybody knows that at some point Bitcoin, there's only going to be 21 million Bitcoin mined. And so the price is going to continue to go up, obviously, but there's going to be fewer and fewer incremental coins. So like, what's the story? What's the next leg of the S curve for these Bitcoin miners when, as we kind of get closer and closer to 21 million? And they both realized kind of at the same time in like 2021, 2022, like, hey, we could use our know-how of, in building out data centers to actually position ourselves well in this coming AI boom that we think is going to happen. And the way that we could do that is using our know-how to go out and find interesting geographies where we could build massive data centers if we needed to, where we'd be positioned, where we could hook up to the local grid, whoever the grid provider is, like ERCOT in Texas, or some power authority in British Columbia in Canada or something, wherever that is. Like, and what kind of pricing can we lock into if we make certain commitments to that power authority, to know that we're going to be able to offer very competitive, energy rates for running a data center in that locale. And so they strategically started buying up land. They started making these agreements with the local power authorities, physically building the data centers, actually buying chips from the NVIDIAs of the world to kind of house these data centers. And so in some cases, they were thinking of like, well, we could start offering services ourselves. We could hosted services, or we could be in a position to kind of look to do deals with others. And the ones that make the most sense to do deals with now are all the hyperscalers like Google, Meta, Oracle. Has this big Project Stargate announcement with OpenAI and stuff. Everybody always announces on their earnings calls that we increased our CapEx budget by another $10 billion this quarter, and we're going to build more data centers. But from that announcement, it's probably like till the moment that those data centers for a Google or a Meta get flipped on, if they're doing it themselves, it's probably like 4 years away, right? And so what these guys like Cipher and Iron, and the other player I like a lot in this space is Hut 8, do is that like they got their start like back in 22, and they started buying the land and building the data centers, and now they've got the sort of their order books out, and they're saying, hey, we want to do deals, and so Cipher and Iron are the most attractive to me because they each have 3 gigawatts of power and powered data centers that are going to be flipped on or energized within the next year. And all the other players that sometimes get a sniff, like TeraWulf or Core Scientific or some of these smaller names that are in the same business, they have like hundreds of megawatts, not gigawatts, that are, and everyone's got like more gigawatts. Like if you look at the backlog, like for the next 8 years, we've got like all these gigawatts, sure. But like, the gigawatts that are going to be coming online in 2031 are less important than the gigawatts that are coming online in the next 12 months. Because for the oracles or whoever, like they need to do deals now. So, anyway, Cipher and Iron are sitting prettiest right now in terms of their kind of near-term gigawatts. So that's why I like them. They obviously have more gigawatts in the hopper as well. And I just think we're going to continue to move forward, and none of us is going to do chat GPT queries any less, I think, as time goes on. In fact, I think it's going to skyrocket up. So we are kind of energy constrained and data center constrained from kind of fulfilling the demand. And those who have access to those kinds of solutions like Cipher and Iron are going to be able to kind of write their ticket.
100 baggers only. That's a pretty good way to operate a firm, I think. Eric, I super appreciate you taking the time today. There's a lot of alpha in this conversation, so we'll have to do it again soon.
Thanks a lot, Phil.
Thank you.